One of the changes in the 21.1 BR revisions announced by the USDA Risk Management Agency last November requires farmers to file for arbitration if they disagree with a crop insurance provider's denial of a claim. Grant Ballard says failure to do so could result in a farmer being unable to challenge the ruling in court. Ballard was a speaker for the recent monthly National Agricultural Law Center webinar.
Another more important revision in 21.1 BR as a revision to the dispute resolution process under the basic provisions. Section 20A1 was revised to clarify that the responsibility is on the producer to start or initiate the arbitration process when a producer disagrees with an insurance provider's determination. This appears to be a direct response to the issue that was raised in the case of Occidental Insurance versus Franklin Bush. I will discuss that case in more detail later in the presentation. But in effect, as a disclaimer, I represented Frank Bush. Frank Bush was alleged to have been overpaid on a crop insurance indemnity. He wrote his insurance provider and said, "I don't owe this money." And the insurance provider basically took no action to collect the money from Mr. Bush. And Mr. Bush did not initiate arbitration. Long story short, years passed, approximately 5 years, and Occidental sued Mr. Bush, alleging that he owed a significant sum of money due to an alleged overpayment. And they made the argument that Mr. Bush had effectively waived the right to defend against their lawsuit, that he had not initiated arbitration. So effectively, the AIP argued that Mr. Bush they argued that they were entitled to a judgment against Mr. Bush. And I responded and basically made the point that arbitration is a two-way street. If we're going to have an arbitration clause in the policy, the burden should be on the party that seeks to obtain a judgment. Obviously, the crop insurance company disputed that. We prevailed at the district court level. But then in November of 2020, the policy was revised to place the burden on the producer to initiate arbitration proceedings. I think this doesn't solve all the questions that were raised in the Occidental v. Frank Bush case, but it's clearly an attempt by RMA to place the burden on an insured to initiate arbitration, even where the insured is not seeking relief. This is a big policy change, big policy development, because arbitration costs money, and effectively the policy is being reformed to require an insured farmer to disprove claims against them. And I think it's, my opinion is unfair, but it's a policy change, and everyone who represents farmers needs to be aware of this. If a crop insurance provider makes any determination by letter to the insured that the insured does not agree with, if that insured does not demand arbitration, it is without a doubt the insured is running the risk of having the crop insurance company file a lawsuit against the insured in federal court, alleging that the insured has waived the right to contest the determination. That can have significant impact on an insured farmer. And I think everyone who works in the area of federal crop insurance needs to be aware of this policy development.